And good evening, everybody. This is Michael Filigera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Monday, June 21st, 2021. The S&P, or the ES, and the NQ were polar opposites today at the beginning of the day, pretty much for most of the day, although the NASDAQ did try to play catch up. The S&P basically started the session pretty much at the lows and just proceeded to rally along with the Dow. The Dow ended up above 600 at one point, up over 600 at one point. The S&P, I believe, was up 58, something of that nature, which let me move over that minute fourth wave and put it into place, which is going to highly suggest that we are now moving up in the minute wave 5. Now, whether this is just the first wave up in its entirety, or that's wave 1, wave 2, and we're now in a 3 of 3, yet to be seen. I personally think that this is going to be the sub-minute wave 1 of minute 5. And that being the case, it would be wave 1, wave 2. This, it looks like a wave 3 that's completing, which would suggest that we're going to get a wave 2, or wave 3, 4, excuse me, a wave 4 pullback, which should not be very deep. In fact, it should not go any lower than right there, 4,210. Into that neighborhood. I would not expect it to go, and absolutely, I think it should be holding above 4205-ish, where that next support zone is going to be, and then rally again, and to finish wave 5, which would then put in the first 5 up. So if this is just completing 3, we're looking at a little bit of a 4th and then a 5th, and then we're looking at these zones up here, max up here into this zone, before we get an additional wave 2 correction. So again, upside targets remain in force. Now, this particular extension is just for this 3rd wave, and it's related, of course, to wave 1. So we've now kind of broken above the 100% level, where wave 3 is equal in length to wave 1. That normally doesn't fit because wave 3s are normally the longest and the strongest, which does suggest that ultimately we're going to get up here. And then we'll correct and then go back up here to complete that particular wave. And then correct again. So it is going to be a stepstone on the way up. Ultimately, though, if this indeed is minute 5, we're looking for it to take out that high at 4,258 and begin to head much higher. In fact, let me take those extensions down and go out a little bit so I can catch all of this wave, which I think I'm going to get unless I move them further out. And I'm going to go one more, and then we're going to put some pretty high levels on this. So stick with me 1 second. Go out to the 4-hour, because what we're looking at is this is the completion point. So now we're going to, wave 5 is related to wave 3. So we got to put our extensions. You know what? I can pull it up just a little bit. Come on, my friend. My computer gives me fits. We're going to put our bottom of wave 3 down to the bottom of wave 4 and go back up to that hourly chart and pull it open. Now you begin to see wave 5 would be equal to 0.618 of wave 3, which exactly in this position is the #1 choice, and that's at 4,268. And you could say that's when that zone really can go up to 42.90. So here we are back 42.70, 42.90. That's a zone. They could complete this fifth wave, but with the structure that's kind of coming up, we're going to leave that open as a possibility, because if this indeed is 1, 2, 3, 4, then 5 may not get any further than that. But if this is just wave 1, then we are looking for much higher levels. And so the next relationship would be that wave 5 would be equal in length to wave 3, and that's at 4,355. So again, here we are talking about those numbers, and you're going to see it's not that I'm shifting, I'm presenting both sides of this picture, because the market could easily just turn around and go back down. And then I'm going to go over that part too. But right now we're talking about this, and I don't want people to get confused. We need to be prepared to trade either direction. So we're going to wrap some parameters around if this thing decides it wants to go up. Well, here's where it should do. And this would be the count. And then this is what I would expect. That's what I'm laying out. That doesn't mean it has to happen. That just says if that count comes into play, that's what I would expect. The market's going to tell us what's really going to be happening. So there's that possibility. But guess what? We have another one way up there. 4,000, basically 500, 4,500. That would, in our minds, I'm sure, because in my mind it says stratosphere, so I don't know, but we have to keep it there because that potential exists. And I'm telling you, and I know I say it a million times, stranger things have happened. So right now, I'm going to stick to the lower atmosphere, and we've got this zone right here. And this zone certainly, because we keep thinking 4,300, and that call's been going out to a lot of fund managers, a lot of people, and that might be still what they're going to aim for if they get this thing going. And from here, folks, it's 80 bucks, 85 bucks up to that resistance at 4,306. So that could be the number. And then we have 4,355. So I think that, yes, this could be a fifth wave, and it will eventually break that. That would be the call. It has to, if it indeed it's that fifth wave. Now, let me take that back off. Let me pull this chart back into alignment so that I can take another look. And what we're looking at here is also the potential. See, this looks a beautiful ABC data. But if the market is going to come off, I would have to assume that this is ABCA, and this is now a B wave up. Has the potential to go right to those levels we were talking about, folks. It can go right up to that high. It can go above that high and still come flying back down. We've discussed this before. Now, we just saw it in the NASDAQ. And so it can happen here as well and still be an acceptable count. So downside right now may be limited to just small pullbacks as the rally continues. Right now on the 1 hourly chart, everything is now falling back into line. Pretty much almost, we still got the 200 up here and it's flat just due to the fact that it's after hours. But we got the 4 and the 8 just kind of just guiding this thing straight up. Now, pullback's still going to happen. And I would suspect that they're going to bring it down within Globex at some point. And then it could come back down in here. Now, these higher levels hold, then, for example, if indeed it's just going to be a wave 3, I have, this is on 2 and this is 3, I have resistance up here at 25, I think it was. Let me just see. What I'm going to do is we're going to relate wave 1 to wave 3 to wave 1 now. Still doing extensions. Let's do this. Just doesn't want to do it. Very annoying. But we're going to try again. Get my computer. See? There you go. There. And we're going to connect to the bottom. All right. So wave 3 is already equal in length to wave 1. It surpassed it, as it should. because wave 3 is the longest and the strongest. So therefore, we've got this zone up next before it could start to decline. So if it is a B wave, we have A, B, and still C. C would be equal to wave A at these levels. So it is still acceptable under both scenarios. So if it pulls back and then roars ahead, then I'm going to say 1, 2, 3, 4, 5. And that changes it. But right now it's 1, 2, 3, and three's this third is finishing. So if it's a C wave, right in here, right in here's where it will be. And within 3, I can count 5. In fact, it's finishing. So that would be first level, that would be second level, and then you get the next C wave down. All possible. That's the downside scenario. And it still would, we'd have to move the 4 again, but this would be A, that would be B, and then you got a C wave down. And that would suggest that eventually we're going to zip down and go through 41, 26, 75. And once again, I'm going to take off that set of Fibonacci's, go back to a different one, because then wave C would be related to wave A. And let's just put it up here at 25, like that. So it's got a little bit of room to go up. But now, see what you're talking? 618 wouldn't work because it didn't create a new low. 100% would work, and that brings us down to 4,094. Now, let's keep going, because what's the most common? Most common, we bring it back to 4,000. We've had this discussion before. So it remains alive. So really the same thing that's going on in the NASDAQ is we have upside scenarios, we have downside scenarios, and both still carry equal probabilities of the one being in force. So again, we're going to trust the market's going to tell us, but we need to be prepared for both sides. So we looked at the upside, now we're looking at the downside, and you can do these same Fibonacci's. This one was an interior. So it was from there to there to there. And that projected our upside targets. If we go out larger, then if this is the end of 4 and we're just going to keep going in a minute 5, then you're going to pull from the bottom of where 3 started up to 3, down to the bottom of 4, and now you've got your projections for wave 5. So everything is there. We can do it. You can do it on your own. Continue on your day trading, folks. We have beautiful moves today. And if you had patience and you could just time yourself with this S&P, they were good. Now, I have to say, there were periods where it moved pretty fast. So you could get caught in something and have to wait and have to kind of like measure the heat that you got to take to get to your next level. But the moving averages were pretty clear. And along with some internal Elliott, it did help a great deal. And it was not as difficult as you think to trade. You just had to kind of wait and be patient and realize that there was a lot of volatility in terms of the speed at which the prices would kind of flip around. But overall, you could make mistakes today and you would come out smelling like a rose because you just had to keep trading and stay focused. And if you were able to do that, you caught these fabulous, absolutely kick-ass moves. Excuse my language. But that's exactly what they were. And they were worthy of being traded. And so if you're an S&P trader, these are the days that you really want to be in tune, in touch with what that market's going to do, and you just get on board, you go with the ride. It isn't a day because your moving averages told you, do not fight this trend. And not today, the trend was up. Just like your moving averages here, they told you, do not fight this trend because the trend was down. And if you had the patience and you could sit and you took heat where you had to, or got out and got back in, however you wanted to trade it, you made decent money all the way down. Now you're making decent money all the way up because you're using the same strategy and it's just a number. That's what's trading, no how high or low, it's the number. And that's how you got to keep it. And then you just trade. I'm going to leave it there. We have our upside, we have our downside, and hopefully we continue to have this volatility and we just don't have an inside day and it sits and does nothing. That makes it more difficult. to make some bigger money, let's say. I will leave it there. And once again, the trade room is open. Get on the list so that you can get over and check out the promo and the email that tells you all about the trade room. The next update will be Tuesday, the 22nd.